We are finally seeing signs of panic in the real estate market after the release of new data from various reliable sources. The main concern for many right now is rapid inventory growth. All the experts who have been right about the market since 2020 have all said the same thing. No matter how high prices get, they can be explained by the simple lack of supply. As Bill McBride declared, inventory tells the tale. Since 2020, the inventory in residential real estate has been extremely tight. With very few homes available, every open house was crowded and offers were pouring in from all directions. Too much money was chasing too few assets, leading to one of the quickest price explosions in American real estate history. But now, after years of bubble-like behavior, fresh new data suggests that we may have a sudden concerning change. One that could transform the real estate environment forever. To understand the situation, we first need to quickly explain the complexities of real estate supply statistics. It's a bit confusing at first glance, but with a simple background description, you'll understand what I'm saying. First off, there are various sources that provide data regarding supply. Each of these sources comes with flaws, lags, and differences in methodology. This makes understanding this data a bit more difficult than a simple glance at a chart. There is also the illusion of raw numbers. Simply looking at the number of homes for sale in the US doesn't accurately measure supply. It gives a misleading view at best. For example, according to Realtor.com data, there were about 1.2 million homes for sale in the US in May 2017. Today, that number is around 800,000. One might conclude that we're about 33% tighter than in 2017, and at one point in 2022, we were around 70% tighter than usual. However, this doesn't consider the number of sales. The better metric to understand inventory is something called months of supply. This might sound boring, but it's crucial to the crash theory everyone talks about on YouTube. Without an increase in the months of supply, price reductions can't happen. The months of supply is the number of homes actively for sale divided by the average number of monthly buyers. This will truly tell you how bad or good the inventory situation is, and what we see today is pretty wild. Bill McBride actually just wrote an article about this on his Substack, which is linked in the description, and what he says is that if sales or the number of transactions happening continues to follow 2023 numbers, then the number of homes listed would have to increase by about 20% to around 880,000 for months of supply to be back to 2019 levels by July. This is possible according to him, and once this is in place, then we can start talking about the collapse of prices. All across the United States, you're seeing people worry about this rapid inventory growth that is taking place. For now, the panic is mostly concentrated in pandemic boom regions like Texas and Florida. Even major real estate CEOs are acknowledging this. Compass CEO Robert Reffkin mentioned it during a live appearance on CNBC about a week ago. Take a listen to this clip where he admits that there are more sellers than buyers.
There's more inventory in the month of May that has had a price drop, 34%, than any time in the last 10 years, which reflects that buyers are finally pushing back on the upper limits of affordability.
So I'm thinking of the Journal piece last week about softness in some cities in Texas and in Florida, and then I think the Washington Post followed with their own report. Is that account for some of that, where these price drops are happening?
Yeah, we're seeing more price drops in the South and in Florida. Florida's being driven by the record price increases that we saw in the prior years, but also home insurance prices are now up 40% year over year.
Do you think the spring selling season happens, or will people wait to see if they get that 5 or 6 handle before they start even looking?
Yeah, I would expect the next 2 months to be better than April because mortgage rates have now come down to 7% when they were just 7.5% a month ago.
Right, where they at least say, let's at least look. Right, we may not bite, but we're gonna start looking around.
Let's start looking around, but it is a different environment. We are now seeing more sellers than buyers. It's 16% more inventory has come on the market, and 40% more in the $1 million plus home market. But with buyers pushing back and with record price drops, we are now seeing more sellers than buyers.
Record price drops?
Yes. Yeah. Right now, the inventory sitting on the market, 34% of it has a price drop, which is more than any time in the last.
But maybe it's
10
not
years.
enough to bring in the buyers.
Maybe it's not. And so sellers who are bringing their homes on the market during this period need to be aware of how buyers are pushing back. If your home is well priced in this environment, it will sell quickly. But if it's not, it will sit in the market. Then you're going to have a price drop. then buyers will see that you had a price drop, the sharks come out, and it'll hurt you even more. This is a time to hire an agent who can give you the right advice with the right CMAs.
A compass agent.
Clearly.
Okay, all right, just making sure.
We now have over 30,000 of them, the best agents in the country.
So you're hiring in this environment?
Absolutely.
It's clear that the inventory picture is changing daily. In some regions, these quick changes are making a turn for the worst. If we look at a specific metro area like Nashville, we can see just how quickly things can shift with numbers being refreshed daily. Austin Witt, a real estate broker from Nashville, posts detailed data specific to the Nashville region. You can check out his Twitter link below in the description. His latest update shows a rapid acceleration in active inventory within this region. From April to May, there was a 12% increase in the number of active listings and a 23% increase compared to the same date last year. The chart he provides might seem a bit exaggerated because the y-axis starts at 6,000 and only compares the past 2 years. However, even zoomed out to 2019, it's evident that we are now above pre-pandemic levels of active inventory, surpassing the 2019 highs. Considering that interest rates have largely remained the same, the stock market is generally stable, and the unemployment rate is unchanged since 2023, we have to ask ourselves, is buyer demand simply drying up, or are more sellers looking to capitalize on their equity gains? Prices in the Nashville region aren't really dropping. In fact, by most accounts, they are rising. This imbalance between rising inventory and rising prices is spooking many experts and causing them to reevaluate the situation on the ground. These two metrics aren't supposed to deviate this far apart, and the further they grow away from each other, the higher the probability of a real estate bubble. Remember, all of this is happening in the summer, typically the prime selling season for houses. If this kind of inventory growth continues, the foundation for these high prices begins to slip away and the market could become much more turbulent. But before we call for a crash, we need to be realistic and look at the national picture. Right now, we're zoomed into one specific region. As I mentioned at the start of the video, national statistics indicate we are still some time away from calling this an impending ticking time bomb. The months of supply is still below 6, making it incredibly hard to see national declines in prices. Even at 6 months of supply, we wouldn't consider this a seriously dangerous number. From the perspective of buyers, we are still years away from a potential downturn. And of course, for a downturn to occur, we would need to see this trend of inventory buildup continue. According to Bill McBride, reaching pre-pandemic months of supply figures nationally is possible this year. And if that happens, then we can truly look to the future with a degree of concern. In most areas of the country, the story is still higher and higher prices, with inventory levels slightly rising yet staying below the 2019 peaks. However, in the pandemic boom areas like Texas, Florida, and Nashville, you can see how much worse the inventory situation is starting to look. And with that, these local markets will act as the canary in the coal mine for the rest of the country. It's only if this massive inventory growth spreads to other areas that we would be able to see a crash. Otherwise, all of this is simply wild speculation. Inventory is the basis for the entire residential market, and unless we get growth to surpass the 2019 highs, there is no hope for a crash. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and let me know what you're seeing in your local market, especially those in Nashville, in the comments below.